Nobody will pay you just for tokenization. The first question will always be and should be, if I give you my asset, you tokenize it, who's going to buy it? Where's your distribution? Where's your liquidity? Just because you tokenize it doesn't change anything. So it was a normal phase of the industry, of the innovation coming to market, that you sold tokenization as a product. The less we talk about tokenization and blockchain, the more it means it arrived in the industry because it's not a topic anymore. Yeah, we use blockchain, not a big deal. And this allows us to work with institutions.
Welcome everyone to Beyond the Cosmoverse. I am your host, Roberto Cassa, Marketing Director at Cosmoverse. And Cosmoverse is a digital asset summit coming to Hong Kong this November alongside the Hong Kong FinTech Week. And in today's conversation, we will start to explore the Hong Kong ecosystem because our guest not only is a pioneer in the tokenized on-chain private markets, but actually is one of the most impactful individuals when it comes to the regulatory advisory scene, being part of the Securities Future Commission FinTech Advisory Group. He has been fundamental in shaping what is today one of the most advanced digital asset framework across every jurisdiction globally. So it is my pleasure to introduce the founder and CEO of Evident, Florian M. Spiegl. Welcome, Florian.
Roberto, thanks for the warm welcome and for the kind words. Yes, indeed. We've seen a lot of development in my 10 years in Hong Kong and happy to talk about it today.
And it's truly a pleasure to have you because with you, we can really span across many topics. And it's really a timely discussion because private markets right now are quite popular, also thanks to AI. But before going there, I want to speak about your origin story, which I found very fascinating. You basically come from the Austrian mountains, actually doing an apprentice as a forester. And now you are founder of one of the most advanced companies when it comes to disrupting the private markets. So how that happened? Because I think it's very interesting. And there is a parallel that you do about that experience from forest to economics, which is very, very interesting.
Yeah, well, I used to say most people don't notice, but I think people now find out the expect about my life. Happy to talk about it. And, when I reflect on it, really also looking back, forestry and being in nature teaches you to zoom out, right? It teaches you to think in decades for the long term. And you could say typical capital markets mostly think in quarters. So it's much more short term. But if I look at this today, I've spent my career in a way trying to bring that first discipline and the long-term thinking and the sustainability and the discipline of it to capital markets. And what really started it's the commonality of systems. Because forests are systems. It's a big machine of growth, right? Economies are systems. They are also machinery of growth in a way. And markets, of course, are systems as well. So there's a through line here, and you can look at this in very similar ways. So this sounds like these are very different areas, but they have a lot of commonality. As I said, the long-term horizon, the compounding, the patience that you need to put in there. And for me, the bridge in real life was economics. So when I graduated from the school where I trained as a forester, already towards the end of that school, I was most interested in the economic side of forestry itself. And so it was a step for me over into studying economics.
I found actually a quote that I found very interesting, which is, you said the bridge into economics was the realization that forest is itself an economic machine.
Exactly. It is. And in German, being from Austria, we speak German. So there's this word Nachhaltigkeit. Nachhaltigkeit comes from forestry. It was first written in a forestry book. And so that's sustainability in English. And so thinking about how can you take something out of a system, right? How can you take profit out while protecting that system, while keeping it sustainable so that it keeps producing returns for you? That is the original idea of sustainability or Nachhaltigkeit. So yes, the forest, as I said, in a sense, is a big economic machine, and it's an easy way to learn about economics. So that was my gateway.
That's actually a very interesting viewpoint and something that definitely not many people in the economics look at it. And I can tell that I also share that kind of viewpoint because being also passionate about nature and that kind of travel where you actually open your mind and you start to look to a different perspective, because I think that's also key. A part of what you do with your job is having a different perspective from the usual funder, especially when it comes to blockchain infrastructure. A point that I want to understand better is when actually that transition to blockchain infrastructure started.
Yeah, first I have to say it's probably easier for you to connect to that because I know you're out there in nature too on long bike tours, as I found out. So it gives you a different perspective. It doesn't matter if it's in the mountains, in the forest, or out there in nature on bike tours. So one thing to add here is my focus today on private markets also has a lot of parallels to that too, because it's that instinct of patience, the structure of things, thinking about the big picture, thinking about the long term. A lot of this is still in the nature of private markets as well. And so I think that's the connection. On blockchain, it's an entirely different story. And yes, Bitcoin brought me to blockchain. Indeed, it was the Bitcoin white paper that I read as a PhD student first in Vienna. The natural connection here is that the Austrian School of Economics is quite prominent and features quite prominently in thinking in the Bitcoin world. And so I looked at this primarily as a theory, right? And as something that is an interesting look on sound money or independent money, if you will, and the skepticism of central control, etc. So that was my very theoretical view. And so that was it. That was the end of the story. But I stayed in touch with this world, which is, of course, for me was a completely new and different world. And also throughout my career, and then obviously Bitcoin at some point picked up its own dynamic. And what for me then the next step was to see this new asset class, but really the technology behind it, in this case built for a system of money, is inherently a system of record, right? It's a record keeping system. So that was to me the really relevant insight later. And
That's
that's the
very
part that
rare
stuck.
actually, because the people that saw first Bitcoin saw it as an asset, and you instead were already thinking in terms of what it could be as a financial infrastructure, what the technology can enable. And on that side of things, right now, moving to Hong Kong, if you're building digital infrastructure, sounds kind of obvious. The jurisdiction is quite advanced in regulation of that field. It makes it appealing to move to Hong Kong, but you moved to Hong Kong roughly 9 years ago, which wasn't obvious at all. So, what actually led you to Hong Kong?
Yeah, I mean, back then it was obvious for me. So it was partly a personal decision and a professional decision. On the highest level, what I always share, also when I speak with young people who are trying to figure things out, always go where the growth is. And so my hypothesis, and that still very much holds today, irrespective of short-term cycles, there is a lot of growth in Asia and a lot of things that are still evolving and still developing. And that automatically leads to more opportunity. Everything is easier if you're in a place of growth. Go to the region of growth or the continent, go to the country of growth, join the company that grows, attach yourself to the person or the department or the manager that's growing the strongest. Take the project that's about growth, right? So I think if you follow that principle, it's in a way a path of less resistance. It makes everything easier. That was the starting point. So it was Asia. And then where in Asia is two components. One is because of my background in what in the crypto world is called TradFi, so in traditional finance, it needed to be a strong and deep capital market, number one. And then number two, something where you see a lot of innovation. So that was one side. The second side is just personal preference. And again, connecting back to my childhood and how I grew up, I love the Hong Kong hills, the trails here. You go 30 minutes out of our office in Central and you're in a different world. It's wonderful. And I love running the trails. It reminds me of the Austrian mountains. There's just nothing like that in the world where you have a really dynamic capital market. Number one IPO market last year with the Hong Kong Exchange, very strong performance, a lot of capital flow, also in private markets. But then at the same time, it is a really high quality place to live. Having said that, of course, since I came here, Hong Kong went through its own cycles with a lot of challenges. We all know about this. And now I would say the last cycle for us as a company, also personally, since 2025, we're back on the upswing. You see tremendous momentum. And I was just recently writing about this. Never bet against Hong Kong, and especially not against Hong Kongers. They have grit and determination. And that's what makes the place.
And when you moved to Hong Kong, I guess you also had a look at the regulatory environment.
So regulation didn't play as much of a role. It's only with the start of Evident. Again, as you said, where I had the pleasure of serving on the FinTech advisory group of the Hong Kong SFC, the securities regulator here, where I realized there's a very healthy balance here. between being tough, really, SFC is a tough regulator. Everybody can tell you that. They strike a very good balance with allowing innovation. And that starts with the people at the regulator. And it starts with the attitude of connecting to the industry, asking questions. Curiosity is not a word you would usually connect with a regulator, but we see it all the time with our regulators here. That's at least my view and our experience also as a company. And I feel like this is why a lot of the groundwork was done here much earlier than in a lot of other places. And if you look at Hong Kong today, it established a model that's increasingly the standard in globally, which is you look at digital assets as two big worlds. One world is crypto. Here it's called virtual assets. That's a new asset class. That's an investable asset class, by the way. That's also interesting to institutions. It behaves in its very own way. Sometimes that means there's more volatility in it and it needs its own rules. So there's a lot of virtual assets rules in Hong Kong, like for virtual assets trading platforms, that's basically the exchanges, for custody, now for stable coins, etc. So this is this side of digital assets. But from very early on, there was a realization there's a whole other side to this. And you could label that as digital securities or tokenized securities. And that means the emphasis is on securities. So we talk about securities here, but with a new system of record. And this is when you really talk about new digital market infrastructure. So taking traditional securities, moving them from old systems and PDFs and sometimes paper and a lot of manual messaging and reconciliation to what I consider a wonderful new global database called blockchain that changes everything. And so it feels like a small thing, well, it's just record keeping, but anyone working in finance knows that's a big deal. That changes everything. And then to build on that, to me, if you think about public markets, so stock markets that are very liquid, we already have pretty standardized, decent systems of record. Yes, they're not new, they're not perfect, but we have a system that allows for very active trading in and out, standardized, etc. But even there, you listen to NASDAQ and others, that infrastructure is very likely going to be replaced with blockchain. But I think where the gap is much, much bigger is private markets. Because in private markets, you do not have a system of record. You have tens of thousands of systems of record that usually sit with fund administrators. They have their own little system from the 90s, all kind of customized, and those don't speak to each other at all. And this is why this industry has been so closed off. For most investors, it's the inefficiency of the processes and the systems. And this is the gap that why I started Evident. That gap is so massive, which means the opportunity is just as massive.
With the blockchain technology and digital infrastructure, there is a path to completely transform the private markets. And that's also when it comes to what do you think is today the differentiation between public market and private market?
Yeah, I changed my mind on that. You probably find some quotes out there where I said private market would go away. So here's how I changed my mind, and here's what I actually mean by that. Private markets will continue to be private markets because you will have this distinct point in time where a company goes public. We have the perfect example of SpaceX going public now. Obviously, Evident, happy investor and happy to have helped our clients to invest as well. We're very excited. We're working very hard to prepare everything. So it shows you going public is this milestone for a company. That will not go away. And so before that, the company will exist inevitably in private markets, right? But what I can say is the nature of private markets will change fundamentally and dramatically with this new piece of digital market infrastructure. It will become more accessible to more of us, the private wealth as it's labeled, right? So these are individual investors. It will move from a stock business where big blocks of investment by institutions sit there for 10 years and they don't get moved around. If they get moved around, it's a big deal. A lot of people make a lot of money if that block moves. It's almost like a special moment. And to something that therefore doesn't see much accessibility or liquidity. It would change from that stock nature to a flow nature. It would become a much more fluid market, which means I may have put in money, like our clients in SpaceX at whatever $300 billion valuation. Prices kept going up, and it may take 20% of my position off the table, lock in a profit along the way, which is frankly impossible today, unless you're a very large investor. It's not how private markets work for individual investors. with new infrastructure, with new record keeping, all of that becomes possible. So you will be able to much more actively manage and balance your position, manage your risk, right? Because if I can get out of a position, that means the risk inherently of that investment is lower. So it will turn into a flow business. And guess what? Is a good place in a sector that turns into a flow business, the company that builds some of the pipes. And that's what Evident is trying to do. We're trying to help move this industry forward and at the same time drive some of that flow. We've seen tremendous growth since last year. As I said, it's not just Hong Kong, also for Evident, a lot of upwind and uplift, but it is mostly driven by, I think, the fundamental change in private markets, one of which is private wealth investors entering that arena.
What do you think is, in that kind of scenario, the stability of the private market? As you mentioned, the accessibility is not broadly, but also it functions in a way that once you invest, you basically have to wait a time that could be quite longer before taking profits. And you can still do it, but it is more complex and difficult. While if this will be on the digital race, it will definitely make it easier, even more liquid. So if we play a scenario where this future is in place, even with something like Anthropic, do you see a difference in the price discovery and raising capital?
We'll definitely see massive change in how this works. And if you think through the entire chain, there are several discoveries happening, right? First, it's about deal discovery. Even knowing that there is a deal out there to be made today is very hard. And it's very limited to local groups. It is literally who I can text on my WeChat or my WhatsApp or my Telegram or my email. So these are very local markets today. And literally people send messages around. Hey, I'm looking for, by the way, today, tens of thousands of messages every day. A few hundred come to us. I'm looking for Anthropic allocation, right? That's how it works. That's how it works. So it's very limited. Deal discovery. Then counterparty discovery, right? So let's say I find a deal, but then how do I know about that counterparty? I don't know that person. How do I find out about them? How can I trust them, etc.? Then price discovery. How do I discover a good price for this? And then let's say we figure all of this out, then you still have the contractual agreement. Let's say you find all of this, you discover, including the price. Then you need to draw up an agreement to make that happen. And finally, clearing and settlement. This is basically what is called closing. In the traditional world is now, okay, now let's put all of that into practice. And then you can imagine that's a multi-month project with many people involved, a lot of people paid. So now if you contrast that with a digital setup that we are running, first of all, deal discovery is digital. You can log on, you see the marketplace. If you're one of our valued clients, you will get ahead notice of new deals coming on the platform. You will see we have more Anthropic allocation, right? And so it's like what happened to retail with e-commerce is now happening to this market. Everything is lifted on a digital plane, and all of a sudden you see, wow, there's all these deals out there, which in the old world you don't know about, right? Then counterparty discovery is of course automatic because the deal is there, the counterparty is there, the counterparty is vetted. Otherwise the deal wouldn't be on our platform. We work very hard. Every deal is underwritten. We put money into every deal ourselves. So every deal is underwritten, every deal goes through due diligence, is reported to our regulator, and so on. So you have to do your homework. Then price discovery, it works much more like a market now, right? You see, maybe there's different offers even for the same asset. What is the market price, right? And then all the way to clearing and settlement. So all the contracts are standardized. Everything runs on digital rails. Clearing and settlement is in real time because under the hood, not that most of our clients really care, but under the hood, all of that runs on blockchain. And so you can do wallet-to-wallet settlement in real time. T plus 00, right? Which minimizes your settlement risk. There are very interesting research papers out there that basically make the simple point. Settlement risk linearly increases simply with the time of settlement. The longer it takes, the more risk. So settlement risk is basically zero if your settlement time is basically real time. So these are all elements that will completely change over the next decade. How these markets work is a complete rewiring. And yes, these are slow change cycles. They take time, but we see the beginnings of this and we see the momentum. And this is why it's so great that we're in this industry at this time of change and to be building in this space.
Yeah, also because I think you just described the evident product market fit very clearly, a platform where you can go check what is the opportunity and more easily engage and enter this market. From a tokenization standpoint, can you share about the experience in terms of tokenized asset?
All of our assets are tokenized. So all the volume that we do runs on blockchain in tokenized format. That's almost our little secret because people like you ask us, okay, so then what do you tokenize? Well, everything is tokenized. But why does it feel like it's not front and center? Because to us, it is not. To us, it is a new form of record keeping that is doing all the things I just explained. So it changes the industry. But guess what? Our clients, they only want those benefits. They do not care which technology we use to deliver those benefits. A way that I express that is we tokenize for evidence. We tokenize for us, so our life is easier and we can deliver these benefits. Our clients are 95% are traditional financial clients. These are family offices, multifamily offices. We work with large private banks. We work with brokers and so on, digital wealth platforms. Right? So these are, you could say, TradFi clients. And to them, that the tokenization aspect doesn't matter. It's interesting. We have a lot of interesting conversations around where a market's going, what can you do with it? But the technology itself is neutral. It's what do you do with it? And honestly, I've been through these cycles. And by the way, we learned this the hard way. It's not like we started and we knew all these truths. No, we made a lot of mistakes. We learned it along the way. And one thing that we learned is to say, take a step back and don't sell the technology, sell the benefits, right? And realize that the good old things that drive this industry will not change, will never change. Strong relationships, because that's how you get the great deals, directly connected to that super high quality assets. Because if you have bad quality assets, it doesn't matter how it's booked and which system of record, it doesn't matter. It's just bad assets. Nobody wants it. And then finally, just being a trustworthy, reliable, efficient counterparty, right? So these are fundamental rules that were always there. We just changed the processes, the operations, the system behind it. But as I spent some time on, right, that is kind of a big deal of what we can do in this market. So maybe as a closing point on this, it was very normal for the industry in tokenization to go through this cycle of being very excited about the technology itself and selling tokenization as a product, which it is not. Nobody will pay you just for tokenization. The first question will always be and should be, okay, if I give you my asset, you tokenize it, who's going to buy it? Where's your distribution? And then the next question will be, well, where's your liquidity? Just because you tokenize it doesn't change anything. It was a normal phase of the industry of the innovation coming to market that you sold tokenization as a product. And that's also how we first looked at it, right? Much more from a tech side. But the fact that we now look at the traditional factors that really drive the industry tells me that really tokenization has arrived. A different way to put it is the less we talk about tokenization and blockchain, the more it means it arrived in the industry because it's not a topic anymore. Yeah, we use blockchain, not a big deal. And this allows us to work with institutions because not that long ago, as you know very well, you could talk to a chief compliance officer of a big Swiss bank, right? And say, oh, we run on blockchain. It was, whoa, wait, you guys are crypto people, So, but now everybody knows, oh, there's a difference, as I explained, right? Oh, this is a system of record. This is about efficiency. BlackRock is doing it too. NASDAQ is doing it too. So it just shows you that I think the market, the aperture is much more wider and open, also for traditional participants. And this is just the segment of the market that we focus on.
It's also what I have seen in the past year, being always on this conversation with founders and people building in the space, that the amount of topics and attention that we do to the technology underlying has been declining because we are kind of in a way where all of this is abstracted. Use that technology, but you are not aware from a user standpoint that you are buying a tokenized asset. We are reached at a point where there is some sort of trustworthy environment for these systems, where you're seeing in private markets the dominant asset class.
I think we all know that in the tokenization world, it's mostly driven by fixed income or yield products at the moment, right? And we cover only, at least in the tokenization space, a very small part of this. But our strategy is different. Our strategy is to say we go, first of all, to the assets that are interesting. Investing into founders, into late stage companies, into high tech companies is a lot of fun, and we just want to do things that we enjoy. But leave that aside. Private wealth investors are not interested necessarily in money market funds. They're interested in participating in private markets, investing in companies, investing in infrastructure, lending to these companies so they can grow, investing into collectibles. So we are hyper commercial. And we go where the market is for these private wealth investors. Our largest vertical and the fastest growing is private equity. So investing into private companies. You have all the US private companies that are in the news. You mentioned some of them as well. And there's tremendous interest, especially investing into the AI space, into the space exploration, and so on. And then because we're here in Hong Kong, we saw very early that in some tech verticals, especially, the world leading companies come from China. They are built on this huge research advantage that China has built. They are commercialized. They're in a space where there's a lot of companies building. They all compete with each other. The ones that survive are immediately global champions because they know how to survive and they know how to fight competition. So they are born and bred in China. They are international companies and they get financed and they go public in Hong Kong. So if you look at robotics, physical AI, it's not even close. The best companies come from China, and that's a reality. If you look at it as neutrally as you can, do your research, go to those places, you will realize that. There's of course, other verticals, obviously everything in batteries and battery innovation, everything in nuclear and generation 4 reactors, etc. Increasingly in biotech, increasingly in the GPU companies even. So those are very unique opportunities that we see here where we're highly selective because there's a lot of companies and where we see a reasonable exit window. So when we invest ourselves and with our clients, those companies are usually close to IPO, so it's so-called pre-IPO investing. So those two sides, late stage pre-IPO investing in the US and China, that's what is most of our business. The third group is everything in secondaries. Because of how we operate, we're able to provide liquidity to this entire space. So imagine, as I said earlier, someone invested into a fund or into a company literally 10 years ago, because these companies are private for a very long time, and they made a lot of money on paper. But at some point, investors want liquidity, especially if it's private wealth. You don't want to wait 15 years. So this is where increasingly also Evident comes in as a buyer together with our clients, and we buy out these stakes into these late stage companies. So we're essentially a liquidity provider to these traditional investments. This is the secondaries market that in itself is growing very strongly. And again, we come to this with a lens of technology enabled transactions, and where my hypothesis is very strong that, again, how secondaries in private markets work will completely change along the chain that I laid out earlier, from deal discovery to clearing and settlement. It will completely change.
You said earlier about the adoption that is happening in 2026 from traditional institutions. You mentioned BlackRock. Of course, one of the bigger enabler for this wasn't necessarily the state of the technology, but rather the state of the regulation across multiple jurisdictions. And we have seen in the past year relevant jurisdiction bringing clarity. Of course, Europe with MiCA, the Middle East, probably the first very crypto native region. And of course, Hong Kong, which has always been very crypto aligned. I remember the times of the crypto hub narrative, but now actually with concrete legislation, the custodian license, also Evident is a licensed organization by the SFC. We are seeing a stablecoin regime, and you that have been part of an HKMA project, the Hong Kong Monetary Authority, and also advised the SFC, do you think that right now actually there is a framework that is ready for broader adoption across traditional finance?
Yeah. It's both actually, and yes, thanks for bringing up Project Ensemble. And now it's actually the current stage is called Project Ensemble TX. And guess what TX stands for? It stands for transaction. And
I had a guess.
That in itself tells you everything, right? It's the HKMA, basically Hong Kong Central Bank, saying the time of white papers and plans and announcements is over. This is about transactions now. They know exactly what it takes. It takes moving from theory and writing some rules to now let's show some real products. Let's show some real flow. So yes, Evident is part of Project Ensemble TX, and you can go through the list, right? You have BlackRock, HSBC, Bank of China, and then Evident. So we're very happy about that. And we're the only pure play tokenization marketplace in Ensemble TX. So what is this about? Ensemble TX is about the perspective from HKMA together with the SFC saying, okay, you need two sides to a transaction. You have the tokenized asset, but you also need essentially tokenized money. Because to settle a transaction, money and asset change hand, like I said earlier, real-time DVP, delivery versus payment. So both regulators on the security side and the money side need to work together. What makes for a strong ecosystem is that there is regulatory coordination and there is alignment. And TX is all about real showcases, right? Basically showing real transactions where you have either tokenized deposits or stable coins, but there is more leaning towards tokenized deposits at the moment, settling against tokenized assets. And so I anticipate there will be more phases of Project Ensemble, just to basically, it's like a sandbox of chosen participants working towards them really bring this into broader use. So to your question, yes, the rules are either already there or are very actively written or upgraded and updated and extended. So that's one side. The second side is our experience and my view for Hong Kong has been for at least since 2024 that you had really good clarity around these things. There were many circulars. The most important topics were clarified and you knew how to operate. Of course, that meant, okay, you need to get a license. And for a lot of players in the crypto industry, that was just something completely new, something that really takes time and in a way stops you from doing business or distracts from your core business. For us, it was different. When we started from day one, we said, okay, we want to get licensed because we're building a real firm here.
So, for someone like me, but also you that has been around this space for quite some time, as you mentioned, we are beyond the pilots. We are literally in a state where a central bank is adopting digital rails, where we have clarity over the regulation. We are seeing public and private companies and institutions all aligning towards the fact that blockchain digital rails is de facto the new financial system, or it's the inevitable financial system. What is actually now the next steps? Because this was almost impossible 5 years ago. Probably AI is accelerating this process because for surviving AI, you also need digital identities, all these systems that needs to ensure a much higher level of security that only the blockchain rails can really guarantee. So what do you think right now you as a founder think in terms of the next steps for the few years?
Well, on that question specifically, the answer is scale. Our job, as evident, and I think for a lot of players in the industry, is simply grow. We built a foundation. It took us years. Our S curve as a company was very flat for very long. So we saw that product market fit, that inflection point in 2025, and now it's all about growth. Growing the high quality assets that we can get from partners, from the top GPs in the world, doing secondaries, getting on ramping these assets on our infrastructure, investing our own capital, and then bringing these to our clients. And on the other side, growing that client base. Because in a way, you want to connect all these dispersed liquidity pools that I mentioned earlier, all the WhatsApp networks and bring it on one level. So you have better connected liquidity pools and literally you build capital bridges. So our second strongest market after here in Hong Kong serving Asia is the UAE. And this capital bridge is growing very strongly. No matter what's happening on the macro side, that is developing. So it's all about scale and growth. The rules are there, the systems are there. When people talk about some technical problem, I'm like, okay, maybe it's already solved. If it's not solved, if there's one thing that comes out of the blockchain industry, things move very fast, right? Innovation cycles are very short. So I think technology is solved. But then you have certain pockets where I think there's still tremendous potential, where we haven't seen really yet a whole lot of progress. One of which to me is, as you said, this identity. And the company is working on this. I'm very excited about what will come out of this space, because that will then directly feed into things like KYC, AML checks, making for a better user experience while at the same time actually improving, I would say, the safety of these products as well. So there's still a lot of work on the other hand of it, but the foundation is there and it's mostly about growth, really. The second point that you touched on is AI. And we were laughing about this not that long ago, saying, okay, now we were talking about blockchain, super hype thing, and then we come with AI. People were like, okay, you just do the hype topics. But I think it's very, very real. We're just starting to talk about this as evident, and I suspect for other firms it's quite similar. So since beginning of last year, basically, we were on our journey of transforming our company into an agentic company. And we just released our first MCP. So we allow, again, a closed circle of clients to connect to our systems. Basically, they can connect their AI agent like Claude or OpenAI to our system. And we spend a lot of our time now on AI. And if you think about it, it's two systems working together quite closely. Blockchain is a new system of record. AI is a new system of orchestration because the AI layer is the automation layer, is the logic layer. And the logic layer works best if it has standardized, immutable, trustworthy data. If you think about what we do with tokenization, we create an immutable, perfect, standardized audit trail of what happened to this asset from day one. This is the best situation for AI. And so to me, these two go really hand in hand. A super high quality data based on a new system of record, and then a high degree of automation using this new system of orchestration. And we have a separate licensed company at Evident that runs all of our administration. So we do fund administration, accounting, reporting, transfer agent, basically all the boring stuff that can be measured. This, to a big degree, is already has gone to the machines at Evident. Again, we don't talk about it that much, but we will. It's, to me, obvious. These things will all be automated. And what does it do? It increases efficiency, it increases transparency, it helps lowering error rates. And in the end, the beneficiaries of that are the ultimate investors. So you can bring more assets to more investors.
You are seeing that basically how complementary is AI technology with blockchain technologies. Right now, wide majority of the market, but also like retails institutions see that AI is actually bringing value more on over traditional institutions, and yet they don't see that translating into the blockchain ecosystem yet. So that was quite an interesting insight, and probably something that could change in the very near future, as we are seeing increased adoption also at a government level. You actually provided today a clear picture of the Hong Kong ecosystem and how ahead is for every company that is building in terms of digital infrastructure, but also Evident being in an HKMA project with giants like BlackRock. A lot of credits for you to actually bringing a blockchain native company to actually being there, being present, because we are in a phase where there is a sort of convergence between traditional finance and the blockchain native. So a lot of credits for the work that you are doing at Evident.
Thank you very much. Honestly, one thing is about consistency. That's one thing I learned, stick with your convictions. But when I started this company, those ideas were all pretty new. Those ideas were not understood. And it was mostly an exercise of persistence and just taking one step at a time. At least half of success in entrepreneurship is timing, and at least half of timing is luck. As I said, in a nutshell, we just feel very fortunate to be in this industry at this time where obviously not just from us, from many builders in this space, we see very interesting things over the coming years.
All right, I think that's a wrap. Thanks a lot, Florian, for joining us today.
Thank you, Roberto. Nice talking to you.